Hey everyone, it's Chris Young with the Mortgage Company, and today is a special edition of Mortgage Monday. I'm outside enjoying the beautiful weather, and I'm excited to be sharing information about VA loans. VA loans are mortgage products that are guaranteed by the Department of Veterans Affairs, which is usually called the VA. The VA does not lend money directly, rather, private banks and lenders, like us, lend the money, and the VA guarantees the loan, which protects the lender in case the buyer defaults. If a potential buyer says they're a veteran or currently in the military, there's a good chance they qualify, but it's not a guarantee. Basically, someone needs to have 181 days of active duty service or 6 years in the Reserves or National Guard before they'll qualify. If a veteran lost their life during service or due to a service-related injury, then their surviving spouse would also be eligible. To avoid confusion, there's something called the COE, or Certificate of Eligibility, that can be obtained from the VA, which spells out exactly if a borrower is eligible or not. The biggest advantage for most veterans is the 0% down payment requirement. Borrowers have the option to put as much money down as they want, and I'll explain why it might be a good idea, but they're never required to have a down payment. The next huge advantage of a VA loan compared to other loan types is that there's no mortgage insurance. There's only an upfront funding fee which can be rolled into the loan and may be waived if the veteran has a service-related disability. The funding fee also varies depending on if the borrower was active duty or reserves, if it's the first use of the program, and how much they're putting as a down payment. As you can see, the higher the down payment, the lower the funding fee. Also, the first time using the program is generally a lower funding fee than subsequent uses. And finally, veterans who are active duty get a lower fee than those in the Reserves or National Guard. Another advantage of VA loans are the interest rates. VA loans are typically going to have a lower interest rate than conventional loans, with rates pretty similar to an FHA mortgage. Now, all of this sounds great, right? But how much money does it actually save? Let's compare two scenarios. So as you can see, VA loans save a buyer money both upfront and on their monthly payments. The maximum loan amount is $424,100, but there's no limit on the price. Any purchase price over $424,100 will simply require the borrower to pay the difference out of pocket. Another cool fact is that VA loans aren't as strict on debt-to-income ratios. Instead, they use a calculation of residual income to determine if the borrower has enough income left over to pay their other bills and expenses. Credit score requirements are also very lenient. In fact, the VA doesn't set a minimum credit score. They leave it up to the lender's discretion, with most lenders requiring a 620 credit score to qualify. Now, I'm sure we're all aware of the stigma that some people associate with VA loans, that somehow our veterans aren't as qualified because they don't need a down payment, and that the loan is going to take forever or delay closing, or that the appraisal is going to be a nightmare, or even that the seller will get stuck paying extra costs and fees. If you're a real estate agent that believes this, we need to chat. Military veterans are among the most qualified home buyers in today's market, with the lowest foreclosure rates over the past 5 years. Yes, that includes prime conventional borrowers. Most veterans I've worked with have good jobs or they own businesses, they have good credit, and they're hardworking men and women who've earned the right to use this phenomenal program. VA loans do require more red tape, but a good lender can still get you to the closing table in 30 days, which is more than reasonable. Well, what about the appraisal? That's a real concern, isn't it? Well, yeah, the house has to meet VA's minimum property requirements. I wouldn't advise buying a fixer-upper with a VA loan, but an average home in decent condition isn't going to be much different than an FHA appraisal. Okay, so what about those extra fees? The truth is that the only typical fee that a veteran can't pay for is a wood-destroying insect inspection. The good news is that there are home inspectors who have special discounts available to our veterans and will perform the WDI inspection for free. Hopefully you've gotten some valuable information from this video, and if nothing else, it changed your perception of VA loans and the men and women who've earned the right to use them. As always, please like and share if you found this helpful. Thanks for watching, and have a great week.